Welcome to our explainer. If you're looking at the Florida real estate market, you're basically standing at a fork in the road. On one path, you've got slow, steady wealth. And on the other, a much, much faster return. So the real question is, which path is the right one for you? Today, we're going to figure that out.
So let's just get right to it. What's your investor personality? Are you a farmer, patiently planting seeds, knowing you'll have this huge harvest years down the line? Or are you more of a flipper, moving fast, buying, improving, and selling for that quick profit? And hey, one isn't better than the other, they're just totally different ways of playing the game.
Okay, before we dive into the good stuff, just our standard but super important reminder, this explainer is for your information only. This is not, I repeat, not legal or financial advice. For any of your specific decisions, please, you've got to consult with a qualified professional.
All right, let's jump right in. You know, when you invest in a place like Florida, maybe the biggest decision you'll make isn't just what to buy. It's how long you're going to hold on to it. It's really a choice between two very, very different timelines.
So here are those two paths right next to each other. You've got the long game. This is all about patience. We're talking 5 years, maybe more. This is that classic slow and steady wealth building. We're going to call this planting a mango tree. Then you've got the medium-term play. This is for investors who want their capital back plus a nice profit in about 3 to 5 years. This is a lot more like harvesting guavas.
Okay, so let's dig into that first path, shall we? We're calling it planting mangoes. And why? Well, because a mango tree, it takes time to grow, right? It demands patience, but when it finally gives you fruit, that reward is substantial, and it can keep on giving for years and years.
I love this quote. It just perfectly nails the mindset. Buying the skinny cow and waiting for it to fatten. You see, you're not paying top dollar for a prize winner today. You're spotting potential that everybody else is missing, maybe in a neighborhood that's just about to take off. This isn't about instant gratification at all. It's about having the vision to see what it could become.
So what does this farmer type of investor really look like? Well, as you can see, their goal is sustained, stable growth. And their absolute key trait is patience. I mean, this is not the person checking Zillow every single day. They're not worried about a market dip next quarter because they're focused on the next decade. You're not obsessively managing it day to day. You're letting it grow. It's the ideal path for long-term wealth creation.
And this is a really crucial point. Not every single property is a mango tree. You have to do some sharp analysis right at the beginning. You know, a single-family home in a suburb with new schools and infrastructure coming in. That has the fundamentals for steady appreciation. That's probably a safer long-term bet than, say, a coastal condo that's super dependent on the whims of tourism.
All right, time to shift gears. Let's talk about the other path, harvesting guavas. Think about it, a guava tree fruits way faster than a mango tree. The harvest is quicker, yeah, but it often requires more specific conditions and a lot more attention to get a really great result.
Yeah, this is your classic fix and flip playbook. It's really a three-step dance. First, you acquire a property that needs some love, something undervalued. Step 2, you renovate. This is where you literally create value with your own hands or your contractors. And third, you sell or refinance to cash out, so you can take that capital and roll it into the very next deal.
But, and this is a big but, this path demands a completely different set of skills. You have to be agile, you have to know the market inside and out, because the best deals, they're often hiding in foreclosures or other distressed sales. It's a high-stakes game, no joke, and you need specialized knowledge just to get in the door. The risk is definitely higher, but that's the trade-off for a shot at a much faster return.
And here is a huge one. Don't overlook this. The guava strategy often requires more liquidity. In other words, you need more cash on hand. Why? Well, because trying to get traditional bank financing for a property you plan to sell in a year or two can be a lot more complicated than getting a standard 30-year mortgage. Speed requires fuel, and in this game, that fuel is usually cash.
Okay, so we've met the mango and the guava. Now let's put them head to head. This is where you can really see the trade-offs in black and white.
Okay, so let's break this down because this chart says it all, really. Look at the capital. You need less cash up front for the long-term hold, but you better have more ready to go for that medium-term play. The risk level, it's generally lower and more spread out over time for the mango strategy, while the guava path is definitely higher risk, higher reward. And the goals, they're just fundamentally different. One is about watching an asset grow in value. The other is about multiplying your capital as fast as you can. At the end of the day, it all comes down to this. Is your greatest asset time, or is it speed?
So there you have it, the two big strategies. But now we get to the most important part of this whole conversation. The question isn't which path is better, it's which path is better for you.
So seriously, take a second.
What kind of investor are you? Are you that patient farmer, totally cool with waiting years for your mango tree to mature and bear fruit? Or are you the energetic harvester, ready to get your hands dirty for that quick guava crop?
Look, your answer is going to come down to these key things. Start with your goals. Is this for a retirement fund that's decades away, or do you need to generate income next year? Then, be really honest about your resources. And I'm not just talking money. How much time can you actually dedicate to a project? And risk. How are you really going to feel if the market takes a downturn? Answering these questions, especially if you have partners, that's what's going to point you in the right direction.
And this brings us to what might be the single most important piece of advice in this whole explainer. It doesn't matter which path you choose if you don't know the terrain. Florida is a massive, incredibly diverse state. Finding that undervalued property for a flip or that perfect suburban home for long-term growth, both of those require deep, on-the-ground local expertise.
And that really brings us back to our final thought, which honestly just says it all. The choice between planting a mango tree for the future or a guava tree for a quicker harvest, that's a deeply personal one. But just remember this, the best fruit, no matter how long it takes to grow, always comes from knowing your soil.